Time for another stock review. This time we are talking Navitas Semiconductor, NVTS. We are talking high tech now. We are talking the correlation between human and AI. We're talking chips. Indeed we are. Not fish and chips, but these chips here. How to make money from these stocks. This is what it's all about. Can you make money from this? Can we put the money printer on? Well, in this review, we are going to see if you can make money. We're going to go and scratch our chin and make some money with this stock. Can we do it? Well, we're going to find out right now. We're going to take a deep dive. We are going to look at the charts. Yes, we are. Not in a full mode, of course. Sensei does that. We're also going to look at the ratings, look at the latest news, latest information, what's going on, how it compares to the S&P. We're going to look at the latest news on what is the stock. We're also going to take a close look at the balance sheet, the inside trading, who's buying, who's selling, insolvency score, profitability score, you name it, we are covering it live on this show. So tap the like button if you approve this message. We're coming up to election season, aren't we? And click subscribe and ring the bell. Now, if you are a member of our channel, you too can order a review just like this. If you want a review done just like this, you can get one. And I can review a stock for you just like this, okay? So is this stock going up to the moon? Are we going to land on the moon and come back and look at ourselves and go, well, we all made lots of money, or what? Well, thank you, Dave Adamson, as we fly through space right now with our AI to see if we can make money with this stock. Well, let's have a look and let's get straight into it. It's being made live. All of these effects and so on and so forth are all happening live. I don't edit these videos. I do them as they are. And that way you know it's real. Now, full disclosure, I don't own the stock. I only own the S&P. I only own the S&P. No one pays or sponsors me from the company to make these videos and say bullish or bearish or whatever. Okay, so you know what I'm saying is based upon the most advanced AI algorithmic software and is real. Okay, simple as that. I will answer everyone's questions who replies below in the comments if you are a member. Every single one. Personally, I don't use AI. I spend a couple of hours a day. Yeah, I literally do that every single day. A couple of hours going through all the comments and messages from the members. Okay, so without further ado, let's get into it. I hope you've tapped the like button and considered subscribing to the channel. Now, if you are interested in this stock, thank you very much indeed. We got a new member.
Mark Ryder has become a member.
Welcome to the channel. You too can order reviews just like this. Now, what our reviews do, they're designed to provide you with the information that you need to decide whether a stock is worth buying, selling, or holding. Not to pump and dump. I'm not in the stock. I don't own any stock apart from the S&P. However, I will say for stocks under $1 million market cap, those very small companies, we can move the stock because we have 25,000 subscribers, and that's enough on the very small stocks. As we get bigger, then things will be different. But we gain about 1,000 subscribers a week. So we are growing. 98% of our live viewers are members. So if you're a member of our channel and you've invested in this and you would like to get the CEO on the show, we have a Meet the CEO series. We've interviewed CEOs up to now, and we've got many more coming up in the future. How do we get them on the show? Well, I don't contact them. I don't sell my services or email or message anyone. It's down to you. You're the investor. What you do is you take this video and the video that's below in the description, which is called the Invite the CEO video. Send that to them via investor relations, customer relations. Investor relations is the best. Either email them or create a group and get them to join your group, and so they know about it. When they start talking to you, you tell them all about they can be the CEO can be live on the show, and then eventually you can put them in contact with me. My email is martyn@martynlucas.com. You can get it on the video, below the video, information wherever you like, and then I'll take it from there. But I want you to be taking care of all of this. This is your stock, your investment. And when they get when they come to me, they've already decided they want to be on the show, and we move forward. So without further ado, let's get straight into the stock and find out what it is. So let's start off very basic and work our way up with more detail as we go. So if we go over the long period, the maximum period, we can see that the stock opened here in 2021, $11.10, and it did what an IPO does. It sort of faded away. Then we had a nice little rally here in 2021, October, and then it's been falling ever since. Very competitive, very difficult space, but we all know the need for chips. Everyone's fully aware of that, right? But it's, as you can see, very volatile stock, certainly an opportunity to make money in all these dips and bumps along the journey. What is it? Starting off nice and simple. Navitas Semiconductor Corporation engages in development of ultra-efficient gallium nitride semiconductors. Its GaN power integrate ICs integrate GaN power with drive, control, and protection to enable charging. Thank you, David Gregory. Power density and energy savings for mobile, consumer, enterprise, eMobility, and new energy markets. The company was founded on August 12, 2020, and is headquartered in Torrance, California. The listed name is NVTS, Navitas, founded in 2020. Now, that new member who's just become a member, I will give you all your perks and benefits in a moment. Please bear with me, wait for me, and I will give you all your benefits in a moment. Just let me finish this video. I'm making it live, and it will go out as its own video shortly. California, 314 employees. Gene Sheridan. There is Gene Sheridan. If you'd like to be on the show, Gene, please contact me. You'll find this video everywhere. If any of the investors contact you, please do respond and come on the show and tell us all about how amazing your company is. We had another technology company a couple of days ago, WidePoint. The CEO was a former FBI agent. He was on our show and he loved it and he wants to come on regularly. So please do come back to us. Margin, if you're buying it on margin, it's 70%. So it's regarded as medium to high risk. 25% is the lowest, 100% is the lowest, 100% is the highest rather. Average volume, 2.26 million today, it's 960. Not huge volume then, okay? No dividend here. Low today, 365. 52-week low, 354. 52-week high, 1117. Market cap, 668.32 million. Okay. We can't move this stock, by the way. We can certainly rank for it, though, on YouTube, as we do for most of our stocks. Most of them, we rank number one. Okay, now then, if we look here, we can see that the analysts are giving it a strong buy. Typically in chips, they do. However, analysts are paid to review the stocks. I'm not, so I don't go off any reviews that anyone tells me at all. I do it myself, and I'm sharing that with you. I'm not paid by anyone to say how great a company is at all. They consistently, until recently, have been beating estimates. Now remember, Wall Street estimate, they don't say what we expect to do. Wall Street expect certain things, and they didn't meet expectations. So I don't take these things too seriously, because at the end of the day, we've seen businesses beat earnings and come down. We've seen earnings miss and go up. So there's much more to it than just what's it doing on earnings. However, it's worth just noting anyway. Who's buying this stock? Palantir, great company. This gives me an indication of how the stock will trade. Great company, but like Elon Musk, everything's overbought with the CEO here, Carp. Everyone overbuys it. It's crazy, but that's the way they do it. SoundHound, great. A lot of interest in this stock. I believe it's a $10 stock. Like that one. Micron, I think I've reviewed it. I just don't remember. SoFi, awful CEO, I'm afraid. I wouldn't have the CEO on the show if they offered me $1 million, because once you make up silly stories, I'm not interested. SoFi CEO was the only person in the world who was saying that the rates were going to come down purely to promote his stock, and it just backfired. You can't make up stuff like that to pump your stock. From that moment on, I don't respect the top of the business. I don't like it. Like the technology, but Robinhood are doing a similar thing. I know they're not the same, but they're very similar. They're a brokerage, but they also do finance just the same way as SoFi do. They've got a credit card coming out and other things. I think they do a better job. I would buy Hood over SoFi just because the CEO talks rubbish. UiPath, I can't remember this one, and I don't think I've done Arcadian. I may have done, but I can't remember what I've said about it in the past. But what that does show me is a little bit that we've got trendy stocks that overbuy, which means that they get overbought very quickly and they're very volatile. But we can already see that in the stock. Anyway, let's move along. Tap the like button, subscribe and ring the bell, and let's see if we can actually make some money from this stock. And tap the like button, by the way, not for me, but it makes the little fellas happy. We've not seen the little fellas for a while. Tap the like button. And if you do that, one thing that's going to happen, you're going to make gold. Because it's just a matter of if you give, you get, right? Yeah? No? Okay, then. Let's carry on with our review. Let's look at the website and see what they say. The Navitas goal is to electrify our world using the next generation power electronics and to enable and accelerate the transition to fast, efficient, clean forms of sustainable energy. Founded in 2014, Navitas develops ultra-efficient gallium nitride GaN semiconductors that are revolutionizing. Let me zoom in for you a bit, just so I can make it a bit clearer. Revolutionizing the world of power electronics in terms of efficiency, performance, size, cost, and sustainability. The name Navitas derives from the Latin word for energy, which encapsulates not just our focus on developing technologies for improved and more sustainable energy use, but also the energy we bring to an estimated 13 billion power semiconductor market by 2026. GaN is growing in importance because of its ability to offer significantly improved performance over conventional silicon semiconductors while reducing the energy and the physical space needed to deliver that performance. GaN technology will accelerate the transition to a sustainable future. Thank you, David Diaz, by delivering efficiency improvements, lowering the cost of clean energy, and reducing the materials and energy needed to create power semiconductors. Navitas is the only industry leader in GaN with drive, control and protection in a simple, easy step, integrated circuit. Navitas are easy to use, digital in, power out building blocks that enable up to 100 faster times switching speeds while increasing energy savings by as much as 40%. Okay, so we've now got an idea a bit about the company. It's not just any chip company, right? Something a little bit different here. All right, we like that. Efficiency, we're talking about efficiency there. Customers adopting Navitas. Who have we got here? Chief Power Architect, leading laptop OEM, CTO mobile charger. Let's have a look here. Simplicity. Who else have we got? Chief Scientist, top 5 mobile phone. Tier 1 solar. There's nothing I recognize on there, but anyway, like to read it out. Love to get this company on the phone. Love them to be on the show. Sounds very interesting. A new type of chip. Sounds very interesting. Would love them to be on the show. There he is, Gene Sheridan, CEO, co-founder and CEO. Love to have them on the show, and they can come on the show. All you've got to do is invite them on, and they'll be here. Let's have a look how it compares to the S&P for the moment, and then we're going to get into the big numbers in a moment. All right, if you put $10,000 back in 2022, you've now got $10,918 the S&P. It's only a couple of years. All right, but in Navitas, 10 grand's gone down to 2.5. So quite a drop, I think you can agree. The S&P, of course, is in blue. It's been pretty sideways most of that time. We've had a little rally recently, but we've come down to go back up again. Anyway, Navitas has dropped right off and it's just continuing. As you can see, it's a lot more volatile as peaks and troughs presents opportunity, but it still tends to be trending downwards overall. Okay, Let's now have a look at some further information. I showed you the chart just for the last couple of days. But anyway, we're not going to go into that today. We've got a rate. If you want the charts, by the way, join Sensei Sunday show, and he will do a chart. If you're a member, he'll do a chart for you and find the buy orders, the sell orders, the levels, the support, resistance, helping you trade the stock, because it is a trading stock at the moment, I would have said. Anyway, strong buy from, a buy from Seeking Alpha and Wall Street are giving it a buy. A strong sell from Quant, that's the trading AI trading platform that they have. Factor grades, valuations B, growth B, profitability B minus, momentum D minus, revisions D. Okay, let's move on. We've got some latest news only out a few days ago. Navitas Semiconductor dips on quarterly filing delay over material weakness in internal controls. Let's read this latest news. Navitas dipped in pre-market trading on Monday as the company was unable to file its quarterly report on identifying material weaknesses in internal control over the financial reporting period ended March 31st. The company added that the material weakness were related to the accounting controls for stock compensation arrangements and license agreements. Navitas said it required additional time to complete its quarter-end financial reporting process and related auditor review relating to the evaluation of certain control deficiencies noted during the review. Okay, the Torrance-based company now expects to file its Form 10Q with the U.S. Securities Commission on or before the 5th calendar day following the prescribed due date. Okay, we look forward to hearing from them, and then of course we will cover the earnings as well if we can do that. If anybody wants me to cover the earnings and you are a member of the channel, let me know and I will cover the earnings for you. We got some more news as well. Let's have a look at this. Taiwan Semiconductor spurs chip gains amid AI-related surge in sales. Let's have a look. Let's scroll down here and see what we see here. Semiconductor stocks were mostly green on Friday. This is like a week or so ago now, as the sector looked to end the week on a positive note, spurred by artificial intelligence-related enthusiasm from industry giant Taiwan Semiconductor. Taiwan Semi shares rose nearly 4.5% after the foundry giant said April revenue surged 59.6% year over year to 236.02 billion in April, an increase of 20.9% versus March. TSM produces chips for some of the world's largest tech companies, including Apple, Nvidia, AMD. The company has seen a rise in. It's just jumped there. Where did it go? I lost my place there for a minute. Where did it go? The company has seen a rise in demand. It's doing it again. It's really confusing me. Why do you keep moving? It's throwing my head off all over the place here. Right. A rise in semiconductors used in AI applications. Nvidia gained 1.41%, while AMD hugged the flat line. Let's go down to Navitas Semiconductor, tumbled 11% after the company issued a weaker than expected forecast for the coming quarter. Following the weak outlook, investment firms Needham and Deutsche Bank each reduced their price targets on Navitas to 7 from 9. Now, one thing that you might consider if you are looking to buy a stock in this sector, I would prefer to perhaps buy an ETF of your favorite, of a basket of your favorite semiconductor businesses. That way they're all in one, because it's hard to know who is going to win and come out on top. So you might consider, there are plenty of ETFs that will cover chips, and that way you kind of cover the broad sector without covering the individual one. It's very difficult to know which one is going to come out on top. Anyway, let's move on now to the serious numbers. This is where we get to find out whether you can actually make money on this and if all the numbers make sense. So let's go over the numbers right now in fine detail. and see if this business can make you some money, starting with the intrinsic valuation. So let's start with that. Here we go. If you've not tapped the like button yet, please do, and also subscribe and ring the bell. Okay, let's get straight into it. And let's have a look. So first of all, intrinsic value. It is overvalued by 8% according to our AI software. Now, all of my members can use this software for free. If you are not a member of the channel, you can't get a discount to this, but my members can. And in fact, you'll get a discount so good that it makes my membership be completely for free. So there you go. If you'd like that software, look above my head, martynlucas.com, all links. You'll find all the links for everything, including Alpha Spread, which is what I am using right now, all below in the description of this video. Okay. Mad Money, Bloomberg, CNBC, none of them offer the deal that I offer. It's the best discount of anyone. Right, so we're saying we're overvalued by 8%. Now, I can overpay it for a stock by up to 25%. On the best case scenario, it is undervalued, right? But we are using the base case. I can overpay by 25% on a growth stock. This has to be a growth stock. So it's still not out of the woods at 6%. So I'm still okay with this so far. I like the industry. I like what they're doing. I don't think I'd buy an individual semiconductor stock. I think I'd prefer to buy an ETF because I don't know which ones are going to come out on top, but I know the sector's going to do well. However, let's go down and look. Is this a potential buy from an individual stock standpoint? 89.3 is the revenue, and we've got March 30th, 2024, and then we're going to kind of go sideways for 2024, and then 2025 we're expecting a slight rise up. So 12% is the most recent raise. The most recent numbers. Operating income is up 4%. Net income is up 40%. Very nice indeed. I've just had some breaking news. Soundhound is down 5.1%. Just breaking news. Just happened. Investing cash flow is up 2%. That's a positive. Investing cash flow is up 62%. That's a negative. And operating cash flow is down 30%. So that doesn't look too good. What about the balance sheet? The balance sheet, 467 million in assets, of which 129. Thank you, Andy, for your subscription. 129 is in million in assets. That's very nice indeed. That equates to cash is 27% of their balance sheet. I like cash on hand, but cash, doesn't do a great deal, really. I like all my cash to go to work. I don't have cash sitting around. I've not got one penny not working. Money was designed to make money. It's not designed to be just whittled away and sat in a drawer or in the bank. Serves no purpose. Don't like 27% of their money sitting in cash, other than what's it doing? Is it earning any interest? I mean, have you got no more use for it? I'm not a fan of holding cash. However, it's not a bad thing either to have cash. At least they've got liquidity. Their liability, 70 million. So the ratio between liabilities and assets is okay. What we don't want is more liabilities and assets, do we? We've got no short or long-term debt. That's good. We like that. But also that means there's no catalyst then for any explosive, when rates come down to help them. So they're not doing too well right now, and rates are high. So if rates come down, they're not necessarily going to do any better. In fact, they're going to do worse because they have got all their cash earning interest where they're going to earn less. So interest rates coming down for a company that holds cash, doesn't have debt, is not a catalyst for improvement. It's actually worse. Their cash will earn less, and their debts, they don't have any. So they're not going to benefit from rates coming down. They want rates to go up, if anything. Anyway, gross margin, 39%. Now, I don't know how good that is, but you can compare it to the competition down here. Again, I'll give you the link to this, and you can compare to what the competition are doing and have side-by-side portfolios and work out whether, which company are best for you in the sector. That's a very good way of doing it. Anyway, so I don't know how their margins compare to another company like Taiwan Semiconductors, On Semiconductors. You can find out. Right, so profitability, 36%. It's in the amber. It's okay, reasonably good. Everything ticked. All nice ticks there. We like that. It's not booming, but it's not losing money. It's making a bit of money. It's okay. What about the balance sheet? 81%. 81% on the balance sheet. Everything's ticking. That's as nearly as high as a balance sheet as I've ever seen. I think the highest I saw was 86. I don't think you go much higher than this. That means they have no debt. That means they have cash. The ratio between balance sheet assets and liabilities is good. And their profitability is okay. So that's why their solvency is good. So it means you can invest in this knowing that they're not going bust in the medium term, the short term, and relatively long term as well. Doesn't mean they can't go bust in 10 years' time. Anything can happen, but they are in a good position right now. So what do Wall Street think? Well, they're giving it a 9% upside from here. 9% upside, 99% upside on the average, and 183% upside as well. So that's looking very good. So they've got a good balance sheet, reasonable profits, high expectation, improving markets. Don't know about the margin yet. I'd need to compare that. A balance sheet, that's okay. Revenue, that's increasing. Operating income, that's increasing. A potentially undervalued stock at best case scenario, or at worst case scenario, 6%, which we can live with, remember, because it's a growth stock. So far, all good. Would I buy this stock? No, I prefer to buy an ETF of it anyway, but it does look pretty good. So it's relatively a buy from me, potential buy, but I would want to look, there's more to do yet. I'd want to look at the competition. I'd want to see if Taiwan Semiconductors is better. Okay, I'd want to look at ON. These are the leaders, and see how they compare. Are their balance sheets better? Do they have more money? Do they make more margins? Remember, the margin is the moat. Who's got the biggest margin tends to win, because you can cut your prices and still remain profitable. If you've got a very small margin, you are always vulnerable from competition. What about insider trading? Well, over the last 12 months, Navitas have not bought any shares and sold 15 million shares. So they've been selling their shares, not buying their shares. That's not very positive, is it? All right. Okay. What about short squeeze? Well, 18.8. Anything over 2 is regarded as excessive. We are not there. And I don't think we have the volume. Let me just have a look at what the volume is on this stock. We need exceptional volume. The volume, let me just scroll down and find it again. Where's the volume on this stock? I'm staring right at it, aren't I? There we go. Average volume, 2.3. Today's volume is 1.17. I'm getting this from here, so you can see 1.17 and average is 2.3. So the volume is down. Not enough volume, no reason for the stock to suddenly pump, and not enough short interest either. So don't expect a short squeeze on this stock anytime soon. There just isn't the movement for that. Do we have any news on the stock? 6 months ago, here is the CEO. We might want to have a quick listen. I know it's 6 months ago, but it will give us a flavor of the company. Here we go.
Important to note, you're not profitable yet, but revenue more than doubled. Give us a sense. What was the driver for demand this quarter?
Well, thank you. It's an exciting time for us launching the 4 technology platforms you talked about, but our revenue has never been higher. We beat our guidance across the revenue and profitability, doubling our revenue from last year, up 20% just from the last quarter. All of this coming from strength in multiple markets. Our first market was GaN for charging your phone, your tablet, or your laptop. We can fast charge those phones and tablets up to 3 times faster with half the size and weight. We're seeing a lot of strength in the smartphone market coming from players like Samsung, the Chinese players like Xiaomi, Oppo, and many others. But we see strength in the other markets too. Our chips are used in solar, are in data center to power those powerful AI processors, and also electric vehicles, fast charge your car.
I want to touch on something you just mentioned. You mentioned you work with quite a few Chinese tech companies. In fact, just about 50% of your revenue comes from China. Give us a sense. We're talking a lot about decoupling, de-risking, also some of the tensions and restrictions between the two countries. How does that impact the long-term growth story for your business?
I think it's promising. It's gotten more complicated for sure, but I think we're seeing a deglobalization where you need to focus on localization. So a lot of people are talking about China for China, the West for the West, and we think that's the right strategy. We've got a great team, a great business, a great supply chain coming together in China. We've got the same thing for the Western countries to serve their needs. So we have to look at the sign of the times. Deglobalization is the trend, and we're following that very strongly and set up to serve our customers wherever they are around the world.
So according to Rosenblatt Securities, you have just about 25% of the GaN chip market. Again, that's often used for higher or newer powering for devices. In fact, you just secured a deal with Samsung to be the chip for their new fast charger. And this GaN market actually, according again to Rosenblatt Securities, basically doubling year over year in the last few years. So this is a lot based on devices. Give us a sense. How do your chips fit into the AI story as well?
Yeah, it's been crazy. Just in the last 9 months, we're seeing nearly a doubling in the power consumption needed for these AI chips. They can take up to 1,000 amps just for a single processor. That's an incredible amount of power. That puts a lot of pressure on us to deliver the power chips that can make that happen. We're just launching a brand new platform, the entire power supply using our latest generation technology that you mentioned earlier. That's double the power density of what you could do with a silicon power device just in the last year. So we're really stepping up to that challenge. We see a huge trend towards using gallium nitride and silicon carbide chips to power data centers next year and then many years to come.
All right, give us a little bit more insight into your
There
business.
we go. We'll leave it right there. I've just got a comment coming in from Ice Mike, so I'll answer that in a second. We are doing a special. I'll explain exactly what we're doing in a moment. I'm making a video right now for a live event. Okay. Anyway, I'll answer your question in a minute. So we're wrapping up our review there right now. So let me come back to this review. So what do I think of this stock? Well, I do like chip sector, obviously, because of everything that I love, AI, technologies and all the rest of it, solar, EVs, VTOLs, all the rest of it are all going to require this. But it's very difficult to pick the winning business. I prefer in this sector to have an ETF basket of funds. So we are collecting all the best semiconductor stocks in one. So we've got exposure to them all. It's very difficult to pick the winner. I do like the information about GaN, the new style of chips that are faster and more efficient and smaller and lighter and all the rest of it. A much greener future. That's all good. And like we saw, the balance sheet was okay. The profitability was okay. This is an interesting company. Perhaps my thought would be, even though I wouldn't buy this anyway, because I only buy the S&P anyway. But even if I was, maybe now the way I'd play this was, let's say I had $1,000. If we just sort of come back over the last 3 months, we can see it's trending down. The slowdown in the slowdown in EVs, for example. Perhaps what I might do is we are trending down. Remember, the trend is your friend. If we keep looking down here, it's down over a year now. In fact, it's down over 5 years. How low is the bottom? Well, as we've just said, we can overpay. We can overpay for a growth stock up to 25%, in my opinion. So it's overvalued by 6% on a base case. We've just shown you the intrinsic value. What I would be perhaps doing would be to buy $1,000. If I had $1,000, I'd put $500 in there now. Another 5% drop, I'd buy a bit more, and then I'd fill up by about 10, 20% further down. I think that's how I'd play it. So it's a potential buy from me. Click above my head for all the information. Down below in the description, you'll find the link to AlphaSpread, our algorithmic software, and you can go and check it out. Over here, you'll see the reviews. I've done nearly 200 reviews now for different companies. And down here, I'll put the playlist for Navitas Semiconductor. So if we get the CEO on, it'll be down there. If you would like me to cover the earnings, you are a member, I'll cover it for you. And further information will be down there. That's it from me. Until next time, as always, take care of yourselves and each other.